Hello guys, it's your boy Xaausd. Welcome to my YouTube channel. As we are about to backtest gold, so without further waste of time, guys, let's quickly jump into the chart and see how the market moved from where we are now till it reaches our take profit. So as you know the culture, guys, we're gonna first highlight our high and our low. This simply means the playground that we are having here will be this one. This is going to be our playground for the next, I don't know till when, but then until our anticipated direction. So guys, what do you do when you get the market printed something like this? You're gonna first identify your trend. As you can see, guys, we are having an descending channel here, which tells us that if ever we're having something like this, what else are we going to be looking at? We're going to be looking for buying opportunities. So guys, as we are looking for buy opportunities, we have to get confirmations first before we enter our buys or before we do anything, we attempt the market. So guys, we're going to be using the daily time frame to backtest this chart so that we can see what's happening in gold. So like guys, as I've plotted my trend lines, and I see that the market, before it printed as a low here, and then it printed as another low here. Excuse me for that. It printed as another low here. What does this mean? It means that we are now having a double bottom. What does a double bottom do? A double bottom reverses the market from the lower part of the market, or I can say from the lower part of the structure to the upper part of the structure. What are we anticipating in this descending structure? We are anticipating a buy of up to a 90%. We are calling this one a 90% rule. So like guys, in order for us to catch a 90% structure of the previous descending channel, what do we have to do? We have to see where, I can say we have to identify where was our previous low. As you can see that we had our previous low here, and this is our low. We won't anticipate for the 100% structure, which was our previous low that it has printed as before. We want to anticipate at least 90%. I can measure my 90% like this guys, so like I can see that out of 100%, this will be our 100% from here to here. It's gonna be our 100% of the structure. So like because I'm looking more for our 90% of the structure, which is called the 90% rule, because like if you wanna trade 100%, the market might not reach the 100%. It might be manipulative. It might lose momentum along the way. So like guys, we're gonna focus more on our 90%. So what happens if the market prints something like this? You must be aware by now that a double bottom reverses the market from the lower part of the structure to the upper part of the structure. So now we're having ourselves a double bottom here. What do we have to do? What do we have to do? Because in this video, we won't be dwelling more on our 4 hours, 1 hour, and 30 minutes time frame. We have to be aware by this time that this is our double bottom, and we have to enter our positions exactly where it came and gave us a double bottom. It came before and then it printed as a low, which it failed to break. Or we're gonna wait and see if ever it fails to break or it continues with the buys. So like I'm gonna quickly press a play here so that I can see whether the market breaks below or it respects our previous low. So like, excuse me. So like, I'm gonna press a play to see whether it breaks below or it moves to the upper part of the market. As you can see that, guys, it broke our resisting diagonal trend line. What does this mean? You have to check the nature of which the market broke our resisting diagonal trend line. It broke our resisting diagonal trend line impulsively. If it breaks it impulsively, guys, what are we looking at? What are we looking at? We're going to be looking at a correction after it breaks our resisting diagonal trend line with an impulse. So like, I'm gonna let it play. Oh, excuse me about the position that we had here. We had a high risk entry position. This is what I call a high risk entry position, whereby we enter at the lower or at the lowest part of the market. So like, this is how we risked. Unfortunately, I removed it by mistake. So like, this is how far we are now. So what am I going to do when I reach at such point? Let's take, I want to take an entry and the market already broke. I'm gonna wait for it to form at least a correction here. A correction here. This correction, you can even say it's a bullish flag. You can even call it a bullish flag. I'm gonna wait for it to give me a bullish flag. This bullish flag, to me, it shows me, or it gives me more confidence to say that the market is more likely to buy, because the pattern that I'll be receiving that is going to be showing me that the market has gained momentum to continue with whatever move that it has been giving us from the low. So like, I'm gonna play it again and see what it gives me. Okay, guys, we can now see that before before the impulse, we got ourselves a correction. What was this correction for? Okay, guys, every time when the market breaks our resisting diagonal trend line, it has to come back and retest it. So like, this correction was a form of a retest to the diagonal resisting trend line that it broke before. I hope everybody can understand. So in order for us to have confidence that the market is more to push to the upside, we have to look the nature on which the market is moving. I'm sure you can understand me, guys. We have to look for the nature, the market of which it's moving to the upside. So by this time, I can have an idea on which the market is moving with which nature. First, from our low, it gave us an impulse. Okay. It gave us an impulse, and then it breaks our resisting diagonal trend line. It gave us a correction, and then it shot impulsively. What next move do I anticipate after this impulse? Obviously, guys, I've seen that the market is moving with an impulse and a correction, and the anticipated pattern that has to follow is another correction. So like, let me play it and see whether the next anticipated move or pattern is a correction, or the market is gonna do whatever it does best. Let us see. The market plays and plays. As you can see that the market is giving us a correction. What is it? What is this correction for? The correction, the market still tries to tell you that I'm still gonna be pushing to the upside. I'm gaining momentum along the way. So like, guys, if you wanna trade this nature move, this nature move, which is an impulse correction, you have to be careful, guys. You don't enter your trades at any point that you wish you can enter. So like I'm not going to be talking about entries and risk management at this point. We're going to be focusing on our 90% rule that we anticipate for this structure. So like, let me continue, see where the market goes. Exactly what we have been talking about all along. We are now 100% sure that the market has been moving at this nature. The impulse correction to the upside. This is another confirmation that shows you that you can hold for a longer time, because if ever the market shows you that boy, I'm gaining momentum, like you have to be aware even yourself that the market is stronger and it's gonna push to the most upper part of the market, excuse me, as I play it again to see where the market turns, because obviously it has to turn at some point.